તો બીડી ગોપલાની આવી ગયા, વિપુલ ધમાસાની આવી ગયા, પછી આવશે તો બધા.
ગોપલાની સાહેબ ચાલુ કરીશું.
Yes, Vipul bhai આવી ગયા છો ને? Sorry oh. Hello.
આવી ગયો સાહેબ, આવી ગયો.
Vipul bhai, sorry oh, Dhruvin bhai, please. We can continue.
દીપલ સર ચાલુ કરીએ આપણે.
Sure.
Okay. First of all, I welcome all the members who have joined this, and I also welcome both the president and secretary of both the associations of the Bhavnagar for joining with us in this webinar. Now I request President of Income Tax Bar Association Bhavnagar, Goplani sir, to continue with this webinar.
Thank you, Dhruvin bhai. First of all, I would like to welcome all the participants who have joined this webinar on behalf of the Bhavnagar Income Tax Bar Association. It's our pleasure that CA Dipal Shah has consented here to be as a speaker on this important subject of TDS on payments to non-residents. એ અત્યારે એક રીતના થોડુંક હોટ ટોપિક બી છે. છેલ્લા જૂન મહિનામાં અને જુલાઈ મહિનામાં કદાચ થોડા ઘણા ચેન્જીસ બી એમાં આવેલા છે. એન્ડ આપણે અમદાવાદ આઈટી બાર એસોસિએશન અને સેલ્ટેક્સ બાર એસોસિએશન જે આપણે કન્ટિન્યુએશન ઓફ જે સિરીઝ ઓફ વેબિનાર છે એમાં એક ઇમ્પોર્ટન્ટ ટોપિક આપણે એડ્રેસ કરશું. અને on behalf of all the three associations, I sincerely thank Dipal Shah sir for consenting to be a panelist over here. And I am sure કે બધા આપણે એને જે નોલેજ શેરિંગ થશે એનું આપણે સારી રીતના લાભ બી ઉઠાવશું. દીપક ભાઈ, અરે સોરી ધુરીન ભાઈ, હું જ ઇન્વાઇટ કરી લઉં વિપુલ ભાઈને. Over to you, Shah સાહેબ. શ્રીધર ભાઈ.
નહીં, આપણે no formality. I'll request CA Vipul bhai to introduce our today's speaker.
Thank you everyone. આજના સ્પીકર આપણા દીપલભાઈ શાહ, એમનું ઇન્ટ્રોડક્શન આપી દઉં. દીપલભાઈ શાહ is an FCA. Hereby I become CA in 2005. He cleared his DISA ICI with third rank in 2005. He has cleared his MCOM in 2007 from Gujarat University. He has started his proprietary firm Dipal Shah and Company in 2005 and carrying on practice in the field of direct taxation, auditing and compliance service, providing consultancy and advisory service to MNC and NRI in the field of international taxation, NRI taxation, drafting of agreements for international transaction, etc. So now we request CA Dipal bhai to educate us. Thank you, sir.
Thank you very much, sir. Thanks. Yeah, I'm very much thankful to the Income Tax Bar Association of Ahmedabad, Bhavnagar and Sales Tax Bar Association as well for providing me an opportunity to provide my knowledge to such a large fraternity. The today's topic is much relevant for some of the CAs, some of the chartered accountants, some of the practitioners. But let me tell you, just check your client's books of account. There is going to be a transaction with the non-resident in your client's books of account, whether it is for the import of the goods or for export of the goods, or with regard to the import of service or export of services. And even you can check your personal transactions. When we purchase a tune from iPhone, we are making a payment outside India, and that is subject to tax or not. That is what we have to discuss. And most of the time we can check the transaction and we find that there are chargeability of the tax on that transaction, but still we do not know about it. So that's why I'm telling you that please kindly go through these provisions whenever you check your books of accounts of your clients. There is going to be transaction, because nowadays there are lots of transactions occurring between the India and the other countries. Okay, so let's start with this discussion. I am sharing my PPT. Okay, so my total knowledge has been divided into two parts. That my total PPT have two parts. First, TDS on payment to non-resident, and second is the applicability of Form 15CA-CB. Okay, let us start with the TDS on payment to non-resident. But before discussing the TDS, we first have to decide what kind of income is chargeable to tax for non-resident, how the non-resident is defined. So that's why we are starting with this section 5. That is the basic section, that what kind of income shall be taxable to different type of residential status SAC. Let's take an example for the resident. For the purpose of resident, global income is taxable. Means wherever the income, whatever the source, it will be taxable in India. As far as not an ordinary resident is considered, income which accrue or arise in India, deemed to accrue or arise in India, received or deemed to be received in India is taxable. That means the income which has a source in India, receipt in India, is taxable. There is a deeming provision which we are going to discuss later on also. As far as the income accruing or arising outside India, that will be taxable for the not an ordinary resident only if the business or profession is set up or controlled from India. If that business or profession is not controlled or set up in India, then it will not be taxable for a not an ordinary resident. Moving to the most important part, non-resident. Now, what kind of income is taxable for non-resident? The income which accrue or arise in India, income which is received for the first time or deemed to be received in India, deemed to accrue or arising in India is taxable. So for the purpose of taxability of the income of non-resident, the source or the receipt has to be in India, and there is a one deeming section where they have provided that following types of income shall be taxable in India. We are going to discuss that also. So section 5 provides the type of income for taxability of the type of income for non-resident. Now moving to the most important part. We are knowing that we are discussing TDS on payment to non-resident, but the question is how to define the non-resident. Okay, and there are two conditions in order to define the non-resident. In the Act, they have not given the definition of non-resident, but they have defined who is called resident. Here we have made the definition in a reversal mode as we are concerned with the non-resident. I have changed the definition in the way to define non-resident. Section 6(1) clause A. When an individual stayed in India for less than 182 days during the previous year, he is said to be fulfilling first part of this section 6(1) clause A. Means an individual is staying in India for less than 182 days, he is satisfying the first part. Clause B has been omitted under the Act. Section 6(1) clause C part 1. Clause 6(1)C has been divided into two parts. I am discussing the first part. When an individual has stayed in India for less than 365 days during 4 previous years, immediately preceding the previous year, then he or she is satisfying the first part only. Okay. Second part, section 6(1) clause C part 2. Stayed in India for less than 60 days during the previous year. Section 6(1) clause C has two parts. Part 1 we have discussed. Part 2 says about the stay in India during that relevant previous year. So if we talk about the financial year 2021-22, if an individual has stayed in India for less than 60 days during previous year and 365 days or more, sorry, less than 365 days during 4 previous year immediately preceding the relevant previous year, then and then only the condition of clause 6C, section 6(1) clause C is satisfied. Okay. So in order to consider any person as a non-resident, both this condition needs to be satisfied. First, he or she should not be stayed in India for more than 182 days, or in another way, should stay in India for less than 182 days. Section 6(1) clause C, part 1 and 2, less than 60 days during the previous year and 365 days, less than 365 days during 4 previous year immediately preceding the relevant previous year. लेकिन आप भी जानते हो और हम समझते हैं कि कभी भी हमारा जो भी लॉ बना है, I am not talking only about the income tax, but you refer any act. There are section, subsection, clauses, subclauses, then there is a proviso. So even in this definition, there is an exception. What kind of exception? This exception is applicable only for the clause C part 2. There is no exception for the part 1. Okay. This exception is defined in such a manner that the person who is a citizen of India leaves India as a member of the crew of an Indian ship or for the purpose of employment outside India, and the period of 60 days shall be replaced by 180 days for the relevant previous year. This is for the financial year 2021-22 we are talking. If the person has stayed in India for less than 60 days, that condition will be replaced by 182 days for a person who is a citizen of India. Then government has introduced an amended provision by Finance Act 2020, whereby they have introduced some new things. What is that? A person who is a citizen of India or person of Indian origin comes to India for any purpose, maybe social, business purpose, or for whatever reason. And previously there was no condition to check his total income, but now they have introduced one condition that if his or her total income from the sources other than foreign sources, means the income from the Indian sources, income from the Indian property is less than 15 lakhs, and the period of 60 days replaced by 182 days for the relevant previous year. So it will remain the same for the exception given for the citizen of India. Okay, but if the total income from sources other than foreign sources is greater than 15 lakhs, then the condition of 60 days shall be replaced by 120 days for the relevant previous year. So when the person of Indian origin or person who is a citizen of India comes to India for any particular purpose, kindly check what is his income from the sources, Indian sources. We are not talking about the income from the foreign sources. If his or her income from the Indian sources are greater than 15 lakhs, then the period of 60 days will be replaced by 120 days instead of 182 days. We have all learned about the 182 days during our education, but now there is a change which we have to take care while we provide the definition of non-resident status. Okay, so this is an amendment made by the Finance Act. There is one new clause introduced under the Income Tax Act, that is clause 6(1)(a). For whom it is important? This is important for an Indian citizen not having liability in any country. Mind it, this is only for an Indian citizen. Previously, we have discussed for citizen as well as person of Indian origin. This clause is applicable only for an Indian citizen. Okay, if the person who is a citizen of India having an income from the sources, having income from the Indian sources greater than 15 lakhs and not liable to tax in any other country, then there is an amendment which says that he shall be liable to pay tax in India as an ordinary resident. Okay, let us understand through this picture. First, determine whether a person is citizen of India. If he is not an Indian citizen, nothing to worry. The condition of the clause 6 part 1 part C, condition of the clause section 6(1) part A and part C both has to be applied. If he is not fulfilling any one of them, no question, no, it will be considered as a ordinary resident. But if he is satisfying the condition as a citizen of India, then we have to check whether the total income from the Indian source is greater than 15 lakhs or not. If the income from the Indian source is less than 15 lakhs, then again, condition of clause 6, clause 6 section 6(1) part A and part C, 180 days during the previous year and 60 days during the previous year plus 365 days during the 4 previous year, preceding previous year, read with the exception. So at that point of time, we have to check that with the exception. Okay. Let's assume that a person has an income from Indian sources greater than 15 lakhs. Then again, we have to check whether liable to pay tax in another country or not. Now, what do you mean by liable to pay tax in another country? Why this kind of provision has been introduced? Because there were Indian citizens who were living outside India, earning income from their different countries and not having a tax in that country. Particularly, I can give you an example of the Middle East, where the country like UAE, Saudi Arabia, where there is no tax on the individual income. Okay, so they do not have any liability to pay tax in their country, and they are not getting the citizenship of that country also. So they are going to be continued as an Indian citizen, not liable to tax in other country. In that case, that person will be called an ordinary resident in India for the purpose of taxation. So wherever the income, whatever the source, they are liable to pay tax in India. But we have to check the total income from the Indian sources greater than 15 lakhs and the citizen of the India has to be satisfied. If that two conditions are satisfied, then only we have to check whether liable to pay tax in other country or not. If not, then make sure that your client pays tax as a resident in India. This is the provision which has been introduced in the recent times, and you will find in your client case that they are fulfilling this criteria. Still, you are filing the return as a non-resident. So kindly check that when you are filing the return. Okay, this is for the individual case. We have to check the non-resident status for the firm, company, other also. So let's move ahead. Residential status for HUF, firm or LLP. When HUF or firm or LLP can be called non-resident? Only if the control and management of its affairs is situated wholly outside India. Means the entire control, entire decision power is situated wholly outside India. If even it is partly in India, then they will be called residents for the purpose of taxation. Okay. Residential status for company, quite important, because when we talk about the transaction with a non-resident, it's quite normally happen with the individual or LLP or company. So what is the residential status of the company? If the company is incorporated outside India, means a foreign company who has a place of business outside India, or its place of effective management is outside India during the relevant previous year, then such company is called non-resident. Question here is, what do you mean by place of effective management? The place of effective management has been defined under the Act, which says that where the key management and commercial decision in substances are made, where the commercial decisions are taken, which has an impact, which has an implication on the operations of the company. If that key management and commercial decisions are taken outside India, then the place of effective management is outside India and they will be called non-resident. Okay. So here we are discussing the meaning of the non-resident type of income which are taxable for non-resident. Once we are getting clarity over this, then we can move ahead on the type of the income which has been taxable under the head non-resident for an individual, HUF, company, etc. Okay. Moving to most important part, section 7, 8, and 9. Section 7 talks about the source of the income. If the source of the income is India, it's taxable for all type of residential status. If we talk about section 8, it talks about the receipt. If the first receipt by a person is in India, then it is taxable in India. So section 7 source, section 8 receipt, and the most important topic is section 9. But I have prepared here the list of sections which are important while getting idea of the non-resident taxation. If you want to understand the non-resident taxation, kindly read these sections, then you will get the full clarity. Section 9, section 195, section 195A, section 206AA, rule 37BC, and section 90 for tax residency certificate defined under TDS. Okay. If you can go through that section, that will provide you a clarity of the type of income, taxation of non-resident, and the applicability of TDS. Okay. Moving to most important section, section 9. This is the section where a person is liable to pay tax based on the deeming fiction, where they have specifically provided the criteria. If this criteria are fulfilled, then you are liable to pay tax in India. It has a section 9.1, 9.1, 2, 3, 4, 5, 6, 7, and 8. Let's start with this section 9.1. That is business profit. If the person is earning an income from the business connection in India, or the property in India, or the asset or the source in India, or from the transfer of capital assets situated in India, then income is taxable in India for the non-resident also. So what do you mean by business connection? It has a very wide definition given under the Act, but in short summary, if the person is having the source of that income in India or having a permanent establishment in India, then only that income can be taxable under section 9.1.1. Okay, I'm not going into the detail of what is called business connection, how the P is defined, because that itself is a task of 1 and 1.5 or 2 hours, as I have to discuss with the TDS. So I am just providing the summary. Section 9.1, 2, and 3 talks about the taxability of the salary if the services are rendered in India. So if some non-resident company has appointed a particular person in India to provide service to some residential company, then such company is or such person is liable to pay tax in India under the head salary income. Okay. Third one, dividend. As we all are aware, dividend was exempt in the hands of individual shareholder for Indian resident. It was taxable for non-resident previously and now also. So if the dividend is declared by the share by the Indian company paid to non-resident, then they are liable to pay tax in India. They have specifically defined this thing. Okay. Capital gain on shares or property. Here the taxation has been based on the situs of the location, based on the source of the income. If the transfer of capital asset is there, like transfer of share, transfer of capital asset, then such property or income arising on the transfer of share shall be chargeable to tax in India. Okay, same way rental from properties. If a non-resident is having a property in India, deriving a rental income, which is nowadays a tax planning for the non-resident, which is nowadays a planning to earn income for the non-resident, because non-resident does not have an interest income or other income in their countries. So they park their funds in India, purchase the property, and then earn the rental income. So such rental income is taxable in India as the source of that income or the situs or that property is located in India. Okay. Moving to the important part, interest, royalty and FTS. अगर हम नॉन रेसिडेंट के टैक्सेशन की बात करें तो नॉन रेसिडेंट के टैक्सेशन में ये क्लॉज एक ऐसा क्लॉज है जिसमें बहुत सारे क्वेश्चन हैं फ्रॉम द डिपार्टमेंट साइड, फ्रॉम द SSE side, and there are lots of controversies going on. बट ये हमें डिस्कस करना पड़ेगा ताकि आगे जाके आपको ये डिफाइन करना पड़ेगा आपके क्लाइंट के लिए. But that we will discuss after one important amendment which the government has introduced. Gift to non-resident. ये हम सब जानते हैं gift to relative is exempt under section 56(2). It was very much clear. लेकिन जब हम gift non-resident को करते हैं तो उसकी taxability कैसे होगी? जब resident to resident हम अगर gift करते हैं तो हमें देखना है कि relative है या non-relative है. But when we make a gift from Indian person to a non-resident, तो उसकी taxability कहाँ पे होगी? Based on the source, तो इनकम तो यहाँ पे हुई नहीं है, सोर्स मेरा नहीं है इंडिया में, तो सिर्फ मुझे तो आउटसाइड इंडिया हुई है, तो टैक्सेबिलिटी नहीं आएगी. सेक्शन 9 इज ए डीमिंग सेक्शन, तो वहां पे ये डिफाइन नहीं था टिल नाउ. बट अब वो डिफाइन किया हुआ है कि इफ देयर इज अ गिफ्ट फ्रॉम एन इंडिविजुअल टू नॉन रेसिडेंट इंडिविजुअल, then it will be taxable if the sum of money is as referred to in section 224(17)(a). What is that? The same thing which has been defined under section 56(2)(10), which says that if it is an income exceeding rupees, if it is a gift exceeding rupees 50,000 to a non-relative, then it will be taxable under the Income Tax Act. Why this kind of provision has been introduced? बिकॉज आप और हम सब जानते हैं कि पहले हवाला का इनकम ट्रांसफर होता था. मीन्स अ पर्सन हु इज सिटिंग इन यूएसए वांट सम मनी फ्रॉम द इंडिया बट डू नॉट वांट टू एंटर इनटू अ रजिस्ट्रेशन विद द रिजर्व बैंक ऑफ इंडिया एज FII और registration as a direct remittance, and did not want to do a leverage remittance scheme benefit. So there was a hawala scheme going on where the person transfer the money to a non-resident, they get the money there, and the particular person in India gets the cash. To curb that kind of transaction, they have introduced this section. So now gift from individual to non-resident individual who is not a relative is taxable. Okay. Now let us discuss the most important topic. Section 916 and 7. Royalty and FTS payment. Section 916 and 7 of the Act has defined what is royalty and FTS. But first, we are discussing when it can be taxable. I am not discussing the royalty or FTS, but I am discussing the taxability thereof. Royalty or FTS to accrue or arise in India, where it is payable by the government or payable by resident, unless it is payable in respect of any right, property or information used or services utilized for the purpose of or in the business or profession carried on by such resident outside India, or for the purpose of making or earning any income from any source outside India. What this clause says that the royalty or FTS shall accrue or arise in India when it is payable by government or payable by resident. But if it is payable for the right, property or information used or service utilized for the business or profession carried on outside India, then no taxability, because business or the profession is carried on outside India, royalty is paid for that activity. So in that case, that will not be taxable. If it is for the purpose of making or earning any income from any source outside India, then also it is not taxable because the source of that income is not in India. Okay. Same way, now we are discussing about the non-resident. If the royalty or FTS is payable by non-resident only, if it is payable in respect of any right, property or information used or services utilized for the purpose of business or profession carried on by such non-resident in India, or for the purpose of making or earning any income from any source in India. So when we talk about the royalty or FTS payable by non-resident, if that royalty or FTS is for the purpose of earning income from any source in India or from the business activity or professional activity carried in India, then only it will be taxable. Okay. First clause says about the payable by resident, whereas the second clause says about the non-resident. So the non-resident यहाँ पे इंडिया में कोई एक्टिविटी कर रहा है जिसके लिए उसको रॉयल्टी पे करनी पड़ रही है, then it will be taxable in India. और अगर वो रेसिडेंट है और इंडियन सोर्स से या इंडियन बिजनेस और प्रोफेशन में उसको रॉयल्टी पे करनी पड़ रही है outside India, then it will be taxable. Okay, so this defines when it is taxable. Moving to next slide, what is the meaning of the royalty under the act? Mind it, I am using the word under the act, and why I am using the word under the act we will discuss in the next slide, because there is a difference between the royalty under the act and under the treaty. Royalty means consideration excluding any consideration which would be the income of the recipient chargeable under the head capital gain. अगर वो royalty capital gain में chargeable है तो यहाँ पे उसका discussion का कोई जरूरत ही नहीं है. So royalty means consideration for the transfer of all or any rights, including granting of license or the imparting of any information concerning the working of or the use of all the intellectual property rights discussed on the right side. That is patent, invention, model, design, secret formula or process or trademark or similar property. So if royalty is payable for any of this intellectual property rights, then it will be taxable under the Indian Income Tax Act. Fourth clause is saying that imparting of any information concerning technical, industrial, commercial, or scientific knowledge, experience, or skill, the use or right to use any industrial, commercial, or scientific equipment, but not including the amounts referred to in Section 44BB. Next clause, the transfer of all or any rights, including the granting of license in respect of any copyright, literary, artistic, or scientific work, including films or videotapes for use in connection with the television or tapes for the use in connection with the radio broadcasting, or the rendering of any service in relation to any of the above clause. ये royalty define किया है under Act. Clause number 5, 6 has been introduced later on when they get the idea of the person is getting royalty for downloading the link from the satellite, when the person is getting the royalty for granting of license for the use of copyright. So they have introduced the definition of the royalty under the Act very earlier, but they have modified it according to the requirement. Fees for technical service, that is called FTS. Okay, fees for technical service means consideration including any lump sum consideration, whether it is an instrument or lump sum consideration, for the rendering of any managerial, any technical or consultancy service, including the provision of the services of the technical or other personnel, but does not include consideration for any construction, assembly, mining, or like project undertaken by the recipient, or consideration which would be income of the recipient chargeable under the head salary. So here they have given a very general definition of the fees for technical services. They have covered managerial, they have covered technical, they have covered consultancy services. Each word has its own meaning. So what has to be defined under FTS? It's a question. By the SSC, they think that it is not an FTS, but the authorities think that it is an FTS. So it's very important to go through this clause, whether it is chargeable under the head fees for technical services or not. Okay. Moving to next slide. Source rule under DTAA for royalty or FTS. Now I am discussing under the DTAA. As I told you previously that the royalty and FTS defined under the Act. Why I am putting stress on the under the Act? Because whenever we discuss about the taxation of the non-resident, we have to also see the DTAA applicable to such non-resident. What is DTAA? DTAA stands for the Double Taxation Avoidance Agreement. Section 90 and 91 of the Indian Income Tax Act has provided the DTAA. DTAA is an agreement entered into India and the other country for the purpose of avoidance of the double taxation. Take an example that royalty is taxable in India. based on the source of the income is in India. Same way, royalty is taxable in other country based on this making of that royalty. Means that the person is deriving the royalty from India, but the technology has been developed in USA. So in that case, both the country would like to make a tax on it. At the end of the day, non-resident has to pay double taxation. So to avoid such kind of situation, the DTAA has been introduced in the law where a person who is liable to pay tax in both the states will get the benefit under DTAA. So if the tax under the Indian Income Tax Act is higher than the tax defined under the DTAA, then he may opt for the beneficial provision. That means he may get the benefit of DTAA and may pay lower tax because both the country are collecting taxes. So ultimately, DTAA will override the provisions of the act if it is beneficial. It is up to the non-resident to decide whether he wants to take the benefit of the DTAA or not. India has entered into DTAA with many countries, and out of the DTAA executed with many countries, Article 11, 12 of the most of the DTAA is for the royalty and FTS. Okay, royalty and FTS are deemed to arise in India under DTAA. Now we are discussing about the DTAA. That means royalty and FTS, if defined under that particular DTAA, is chargeable if payer is a resident of India, means the person who pays for the royalty is a resident of India, or the payer has a PE in India in connection which the liability to pay royalty or FTS arise and the payment thereof is borne by the PE. So royalty and FTS is taxable under DTAA if there is permanent establishment in India in connection with which the liability to pay a royalty or FTS arise and the payment thereof is borne by the PE. So if some non-resident is having a development technology which is used in India, then it will not be chargeable to tax because that non-resident does not have a PE in India under the DTAA. So if a person is not having a PE in India, he is not liable to pay tax in India because he is not having any permanent establishment or business connection in India. This is defined under the DTAA. So on the other hand, when we check the royalty or FTS under the Act, it says that if it is from the business or profession situated in India or for the purpose of making or earning any income in India, it is taxable. But when we look at the DTAA, it says that it will not be taxable if it does not have a PE or business connection in India. So non-resident will get the benefit of not getting tax on their royalty income in India under the DTAA. Okay, clear? That's why it's very important to discuss about the DTAA provision, and please make note of that. Whenever you see the transaction with regard to a non-resident, kindly check Act. Along with that, also check DTAA executed with that country or not. You will find that in most DTAA, you will find that the royalty and FTS is exempt based on this criteria. Okay, so kindly check that. Royalty and FTS paid to non-resident. What I am discussing now, that DTAA shall override the provisions of the Income Tax Act. So if the DTAA provides for the exemption of tax on royalty and FTS, then there will be no tax under the Indian Income Tax Act. Okay. What is the difference between royalty and FTS? As we have seen, the royalty is for the imparting of the knowledge, acquiring any right, invention, patents, model, design, whereas the fees for technical services for the managerial, technical or consultancy services. You have to understand the meaning of the royalty under the Act and the royalty under the treaty. Each treaty defines the royalty and each treaty defines the FTS. So there is a difference between the royalty as per the Act and as per the FTA. Kindly go through the same before deciding whether it is subject to TDS or not. Okay. While discussing the FTS, I would like to discuss make available definition of the FTS in treaty and not in IT Act. जब अपने FTS की बात कर रहे हैं तो मैनेजर टेक्निकल कंसल्टेंसी सर्विसेज की बात कर रहे हैं. अब यहाँ पे डिस्कशन हो रहा है मेक अवेलेबल क्लॉज की. There are 3 different models of taxation which has been followed while defining the treaty. First model is the OECD model, that is Organization for Economic Cooperation and Development. Second one is the UN model, and third one is the US model. All these 3 type of model provides which kind of income shall be taxable, how it will be taxable. Okay, so in some of the DTAA you will find that there is a clause of make available while defining the FTS, and some of the DT will not have a clause of make available. Why it is important? When we discuss about the royalty and FTS under the Act, they have precisely given that this is chargeable to tax. But the treaty sometimes says that if that fees for technical services does not have a make available right, then it will not be taxable. So what is make available? Make available means when a particular person is getting a right over that technical knowledge, having a right to use that, having a right to modify that technology, then that clause is called a make available. There is a difference between make available and made available. If you get a license to use a particular technology, then it is a made available because you do not have a right to alter it. You do not have a right to modify it. You just get the right to use it, but you do not get the ownership of that document or the technology. But if that person has given you a right to use it, right, and they have modified that technology as per your requirement, and you get the exclusive ownership of that, then that technology is called provided to you through make available clauses. Means you get the right over the ownership of that technology. In that case, DTAA provides that yes, it will be taxable in the India. Okay, so that's why you have to check in DTAA whether FTS clause is there or not. If the FTS clause is not available in the treaty, then what will happen? This next slide, next point is TDS, where FTS article is missing in the treaty. You will find that in some of the treaty, royalty is taxable, royalty is defined, but there is no separate clause for the fees for technical services. So what will happen in that case? In that case, where the FTS has not been included in the treaty, the income which the person derives from the technical managerial consultancy shall be chargeable as if business profit. That means we will go to the section 911. That person will get the taxability under Income Tax Act under section 911. And when we talk about the DTAA, it will be taxable only if there is a permanent establishment in India or having a business connection in India. Okay, so in that case, Article 7 of the PE shall be applicable in case of DTAA. So royalty or FTS is a clause where there are number of judgments. Some of them are in favor of the authority, some of them are favor in SSC, but still it's going on in a both the way. Okay. Now I'm discussing with the explanation which has been introduced with the retrospective effect. This happens in India only, where the law has been amended with the retrospective effect. आप किसी और भी कंट्री का लॉ देख लो, वहां पे अमेंडमेंट होता है तो रेट्रोस्पेक्टिव कभी नहीं होता है, लेकिन इंडिया में ही ये पॉसिबल है कि हमारे यहाँ पे अमेंडमेंट रेट्रोस्पेक्टिवली हो जाते हैं. So they have introduced this explanation to section 9(1) with the retrospective effect under the Finance Act 2010, having an effect with effect from April 1976. Okay, so interest, royalty, FTS shall be included as an income of the non-resident, whether or not non-resident has a residence or place of business or business connection in India or has rendered a service in India. ध्यान रखिए यहाँ पे whether or not non-resident has a residence or place of business or business connection in India or has rendered a service in India. So they have introduced the explanation that I do not want to check whether the resident has a T in India, whether has a business in India, whether has service rendered in India or not. Irrespective of the place of location of the business, irrespective of the performance of the services where it has been delivered, it will be taxable in India under the Act. And again, I am putting a stress that please check DTAA, because if the DTAA does not provide such kind of taxation, then beneficial provision will apply. So in that case, a non-resident is not liable to have TDS in India if the DTAA provides that it is not taxable. Okay, so kindly check DTAA before making a TDS on non-resident payment, particularly with regard to interest, royalty, and FTS. Okay. Moving to another expansion of the definition of the royalty. This has been expanded in such a manner that they want to include each and everything under the royalty. Okay, they have introduced expression 4. They have covered each and every transaction which can come in our mind. What does it say? For the removal of doubt, it is hereby clarified that the transfer of all or any rights in respect of any such right, property or information includes and has always included. उन्होंने इतना डिटेल में दे दिया है कि जहां पे कोई भी स्कोप बचे ही नहीं कि वो आउटसाइड परव्यू ऑफ द टैक्स जाए. Has always included transfer of all or any right for the use or right to use computer software, including granting of license irrespective of the medium through which such right is transferred. This explanation has been added particularly to cover that transaction where Microsoft or Adobe is providing the right to use a granting of the license to use a particular computer software, and you have to pay royalty to the Microsoft or Adobe as their subscription charges. So they want to cover that transaction, and that's why they have introduced this explanation. Explanation 5. For the removal of doubts, it is hereby clarified that the royalty includes and has always included consideration in respect of any right, property or information, whether or not a possession or control of such right, property or information is with the payer, such right, property or information is used directly by the payer, whether or not the location of such right, property or information is in India. As we have discussed previously, they want to tax each and everything, whether it is taxable, whether it is provided in India or not, whether the location of that property or right is India or not. They want to tax everything which is payable as a royalty. Okay. Expression 6. For the removal of doubt, it is hereby clarified that expression process includes and shall be deemed to have always included transmission by satellite, including uplinking, amplification, conversion for downlinking of any signal, cable, optic fiber, or any other similar technology, whether or not such process is a secret. What this explanation says? As you are aware that when now we are watching the films on the theater or maybe on your home television screen, you generally download the link from the satellite which is located outside India. Okay, and you have to pay charges for that. So they want to tax that as you are providing a service to a person who is located in India, deriving the income from that person, and you are supposed to pay charges, royalty, subscription charges in India. Okay, they want to tax that subscription charges, they want to tax that royalty charges. Clear? Same way you can say for the optical fiber. As we can see, we are using optical fiber for our telecommunication network. Most of the time that optical fiber network is getting the bandwidth from outside India. So we have to pay bandwidth charges to such a company located outside India. And the company wants to that also, because you are getting the revenue from the person in India for the use of such bandwidth in India. I want to tax that income as a royalty. So all this provision has been introduced along with the previous explanation, which says that whether or not service provided in India, whether or not whether or not particular person has a business connection in India, they want to tax it. So this is under the Act. And as we discussed previously, you kindly go through the DTAA. If the DTAA does not provide taxation of such activity, then the SSC will get the benefit of DTAA and shall not be subject to TDS with regard to non-resident payment. Okay. Now I'm discussing some of the issues which has created and which has been amended, which has been occurred even after the introduction of the explanation. Take an example of data transmission services. When the data is transmitted from the USA to India through technology. After introduction of the explanation 6 to section 916, taxable as a royalty under income tax act. उन्होंने तो define कर दिया कि आप यहाँ से source या Indian source से income ले रहे हो, taxable. Okay. But when we check the DTAA of the USA, no amendment to the act, whether retrospective or prospective, as they have made the retrospective amendment, जो DTAA has specifically mentioned that no amendment to the act, whether retrospective or prospective, can be read in a manner so as to extend in operation to the terms of an international treaty. So that means if it is not defined in the treaty, then it will get the benefit of the treaty. Hence, the same would not be considered as a royalty under the treaty, hence not taxable in India. Okay, Act says liable to tax, DTAA says not liable to tax as it is not defined as a royalty. Clear? Okay, moving to second one. Payment for shrink wrap software by distributor to non-resident company. What is that? Which we already know about the Microsoft license, Adobe license. Okay. After the introduction of the expansion 4 to section 916, right to use that software is taxable as a royalty under Indian Income Tax Act. So if we are getting an Adobe license and paying some subscription charges, you are getting the MS license and paying that charges to the Microsoft, that is taxable under the Act. But what under DTAA of USA? I have taken the example of USA DTAA. The alteration in the provision of that cannot override the treaty unless there is a corresponding amendment in the definition of the royalty under applicable treaty. And hence, the transaction will not be covered under royalty as per treaty definition. So here it says that whatever the amendment has been made in the Act, if such kind of amendment has not been incorporated in the DTAA, then the provision of the DTAA shall override the amendment made in the Act. So in that case, such transaction will not be covered as a royalty and will not have any tax implication in India. Okay. So by this, I am covering the part of the non-resident. So what we will get the clarity that what kind of income is chargeable to tax, who is called a non-resident. Kindly go through the section 9 and particularly section 916 and 7 with regard to royalty and FTS. And thereafter, please go through the DTAA. India has executed DTAA with various countries. And kindly go through that before deciding whether this payment is chargeable to tax or not. Okay. Now, the most important part. Once we are deciding that, yes, this payment is chargeable to tax, so the TDS shall be applicable. Okay. Now comes the question, applicability of Form 15CA-CB. What taxable hai? Now, how do that information has to be provided to the government of India? So that's why the government has introduced the Form 15CA-CB. But before discussing 15CA-CB, you have to understand whether it is taxable or not, and that's why we have discussed it. Okay. Moving to important part, applicability of Form 15CA-CB. 1 minute. When we are talking about the TDS, there are various provisions under the Act with regard to the TDS provision. But as far as non-resident is concerned, only one section is there which provides for all kind of TDS with regard to a non-resident transaction. What is that? Any person responsible for paying to a non-resident, not being a company or to a foreign company, an interest or any other sum chargeable under the provision of this act. Any other sum chargeable under the provision of this act. Okay. Shall at the time of the credit of such income to the account of the payee or at the time of payment thereof in cash or by check or by draft or by any other mode, whichever is earlier, deduct income tax thereon at the rates in force. Okay, this is the definition given under the section 195 for the TDS on non-resident transaction. Here I have highlighted some words which are important. First word is any person. That means it is applicable to each and every person defined under the act covered in definition of the person. Okay, clear? Paying to non-resident. What do you mean by non-resident? That is what we have discussed under section 5 of the act, who is called non-resident. Okay. Provision is related to deduction of tax. Applicable when the payee is non-resident, means the person who is going to receive is a non-resident. Section 195 does not provide for a minimum threshold. When we talk about the various provisions under the TDS like section 194, A, B, C, J, they provide the deduction of the TDS and they provide the minimum threshold criteria, right? जैसे कि 194C की बात करें तो 30,000 और 1 lakh, 194J की बात करें तो 30,000. But when we talk about the TDS with regard to non-resident transaction, there is no minimum threshold. That means from the first rupee itself, if the income is chargeable to tax, then the TDS will be applicable from the first rupee. Okay, applies to all person making payment to non-resident. Important limit. Obligation to deduct the tax arises only if the payment has an element of an income chargeable to tax in India. So that means if the income which we are paying to a non-resident, if chargeable to tax under the act, chargeability of the income arises from section 4, 5, 6, 7, 8, 9. Okay, section 4 provides for the chargeability, section 6, 7, 8, 9 provides for the type of income taxable in India. So if that section covers that this is a taxable income, then only obligation to deduct the tax arises. So you have to be very much clear that whether that income is chargeable to tax or not. If it is chargeable, then go to section 195. If it is not chargeable, forget about it. That is not subject to TDS. Okay. The word sum includes both monetary as well as non-monetary payment. Here the word is sum. Here they have not defined the income. The part important is sum. Okay, it includes both monetary as well as non-monetary payment. That means if you have provided some benefit to a non-resident in kind, then also it is subject to TDS if such element has an income chargeable to tax in India. Okay, so be clear. You have to follow the TDS provision with regard to non-resident if only it is chargeable to tax in India under the act. Okay. Any other sum chargeable to tax means. So Supreme Court has very clearly defined in the case of GE India Technology Center that the moment there is a remittance out of India, it does not trigger section 195. So each and every transaction is not subject to TDS. The payer is bound to deduct tax only if the sum is chargeable to tax in India. Read with section 4, 5, 6, 7, 8, 9. Okay. I have covered here section 6, section 4, 5, and 9 only because the remaining section we have discussed. Second, section 195 not only covers amounts which represent the pure income payments, but also cover the composite payment which has an element of income embedded in them. So here you will find some transaction where there is a component of income and there is a component of reimbursement also. So the liability of TDS shall arise only on that component which has a element of income embedded in them. Okay. However, obligation to deduct TDS on such composite payments would be limited to the appropriate proportion of the income forming part of that gross sum. So that income will be taxable only where it is chargeable to tax. Okay, clear? When you read the section 194, it has a last line, it should be chargeable to tax at the rates in force. So what is the meaning of rates in force? As we all know, rates in force has been defined under section 237A, but in section 237A, they have specifically defined rates in force for the purpose of section 195. So what does it mean? For the purpose of 195, rates or rates in force as per section 2 in bracket 37A means rate or rates of income tax as specified in the Finance Act of the relevant year, or the rates or rates of income tax as specified in an arrangement entered into by the central government under section 90 or agreement notified by the central government under section 90A. So when we talk about the rates in force for the purpose of non-resident transaction, it should be rates or rates of income tax under the Finance Act, means for the particular year, whatever the rates defined for the resident, non-resident, company, individual, that rate, or the rates or rates of income tax as specified in the special DTAA agreement executed with that country. Okay. Section 90 and 90AA provides for the DTAA provisions, and the DTAA provides the rate of tax on the such kind of income which is chargeable to tax in India. Okay. At this point of time, we are also required to understand section 195(6), which says that obligation is on the payer of any sum, whether or not chargeable under the provision of the Act, furnish the information related to payment of such sum in such form and manner as may be prescribed. This is the irony of the law. What section 195 says that the liability to pay TDS arise only if income chargeable to tax. So if my income is not chargeable to tax, there is no need to deduct TDS. Then there is no need to file any particular form with the government because that is not taxable. But then the government introduced section 195(6), which says that whether or not chargeable under the provision of the Act. So whether that income is chargeable or not doesn't matter. You have to furnish the information related to payment of such sum in such form and the manner as may be prescribed. So even if that income is not chargeable to tax, but if it has been defined under the income tax rules, then you have to provide that information to the government of India. And that is where the clause of, that is where this applicability of 15CA-CB comes into picture. Okay. Method of deducting tax. Let's assume that the sum is chargeable to tax. And how the tax will be deducted? It will be deducted as the rates defined under the Indian income tax or the rate as defined under DTAA. But you have to deduct the tax at the rate whichever is lower. So if the royalty is chargeable to tax under the Income Tax Act at the rate of 30% on the non-resident company, but the royalty has been defined under DTAA and the rate defined is at the rate of 10%, then you have to deduct the TDS at the lower rate. Now we have discussed every time DTAA, but how could we get the excess of DTAA? There are various DTAA excess, various DTAA has been executed by the India. So the site of the Indian income tax provides all the DTAA executed with the various country. The site is incometaxindia.gov.in, not incometax.gov.in. That is the site for the purpose of filing return. But when we talk about the incometaxindia.gov.in, it is a separate site providing the details of the Act, rules, notification circular. Kindly go through the link mentioned herewith. You will get all the DTAA executed with the various country. Such DTAA are amended on time to time basis. So there are situations where the royalty and its explanation has been introduced by the Act, and some of them has been amended to cover up that provision also. Okay. बट अब जब हम DTAA में बात कर रहे हैं कि DTAA में मुझे बेनिफिट मिलेगा ऑफ द लोअर रेट, सो व्हाट काइंड ऑफ डॉक्यूमेंट्स a payer means a resident Indian has to collect from the non-resident to get the benefit of DTAA. Non-residents should have a valid tax residency certificate. Form 10F has been duly filled and signed by non-resident, and other details like nationality, tax identification number, status, address in such country. All this information we have to collect from the non-resident before making payment of TDS. All these details are required in order to get the benefit of DTAA. Sometimes it happens that a non-resident does not have a tax residency certificate. So in that case, we have to collect Form 10F from that particular non-resident. Form 10F has been provided under the Indian income tax rule, which provides the details of the particular person, his address, his tax identification number, details of the nature of transaction executed with non-resident, etc. At the same time, we have to collect the nationality, status, address in such country in order to get the benefit of DTAA. Now, CBDT notification to file Form 10F electronically. Why I am laughing? Because Form 10F डिफाइन किया हुआ बरसों से है, ऐसा नहीं है कि आज से है, बट प्रीवियसली फॉर्म 10F आपको नॉन रेसिडेंट से फिलअप करवा के साइन करवा के अपने रिकॉर्ड में रखना था। आप अपने सीए को वो फॉर्म देंगे, वो वेरीफाई करेगा एंड बेस्ड ऑन दैट वो DTAA का बेनिफिट आपको अलाउ करेगा। बट द गवर्नमेंट इज वेरी सीरियस कि भैया ये प्रोविजन तो हमने डाल दिया है, लेकिन वो कलेक्ट करते हैं कि नहीं करते हैं, चेक होता है कि नहीं होता है, हाउ द गवर्नमेंट विल नो? So that's why they have introduced a notification number 3/2022 dated 16 July 2022. अपने यहाँ भी एक चीज बहुत ही कॉमन है, लॉ बनाते हैं हम थ्रू फाइनेंस एक्ट जो पब्लिश होता है एट द एंड ऑफ द जनवरी। लॉ बनाने के लिए उसके बाद जो प्रोविजंस आते हैं उसमें रूल्स आते हैं, वो बनाने के लिए वो टाइम देते हैं, लेकिन हमारे यहाँ पे ऑलमोस्ट डिले चलता है। ओके, सो उन्होंने डिफाइन कर दिया था फाइनेंस एक्ट में कि हम ये प्रोविजन डाल रहे हैं कि फाइनेंस एक्ट में फॉर्म 10F अब आपको इलेक्ट्रॉनिकली फाइल करना है, बट एज यूजुअल ये हुआ notified on 16 July where they make non-resident to file form 10F electronically. अब उन्होंने डिसाइड तो कर लिया कि आपको फॉर्म 10F इलेक्ट्रॉनिकली फाइल करना है, तो कैसे करेंगे? तो ये बोला कि नॉन रेसिडेंट को इनकम टैक्स की साइट के ऊपर जाके लॉग इन करके फॉर्म 10F फाइल करना पड़ेगा। हमने वहां पे नोटिफाइड करके उसका फॉर्मेट दे दिया है, आपको वो इलेक्ट्रॉनिकली फाइल करना होगा। लेकिन एट दैट पॉइंट ऑफ टाइम ये भूल गए कि अगर नॉन रेसिडेंट के पास पान ही नहीं है तो कैसे फाइल करेंगे? It's not necessary that the non-resident should have a PAN in India for making transaction with the Indian resident. Okay? So वो भूल गए कि अब ये नॉन रेसिडेंट तो है, पान है नहीं, तो वो लॉगिन कैसे करेगा? अगर लॉगिन नहीं होगा तो फाइल कैसे करेंगे? So they come to know about it after a period of 6 months. On 16 December 2022, a clarification given by the Director General of Information Technology providing a partial reduction in filing of Form 10F electronically for non-resident not having PAN till 31st March 2023. That means अगर non-resident के पास PAN नहीं है तो Form 10F अब आपको electronically file नहीं करना है. But mind it, if your SAC has done a transaction with the non-resident which has a PAN, then before allowing the benefit under DTAA, that non-resident has to file Form 10F electronically by logging onto the income tax website, creating or registering their login, and that has to be filed electronically. This amendment, this relaxation has been provided only to non-resident not having PAN. Okay. Further, you have to check the provisions of the GAR applicable from the assessment year 22-23. GAR. General Anti-Avoidance Rules. Okay, the provision itself has been defined in such a manner where if the transaction has been occurred between the two persons One of them is in India and one of them is outside India. And the transaction has been framed in such a manner so as to pass on the benefit of an income outside India. They want to shift the income from India to outside India. To curb that kind of transaction, provision of the GAR has been introduced. Chapter 10A of the Income Tax Act, providing section 95 to 102 of the Act, has all the provision relating to GAR. Kindly go through the same if you feel that there is a shifting of income from India to outside India. Okay, it is a very detailed provision. Kindly go through that before making a TDS with regard to non-resident transaction. Deduction of tax under the Act. So section 195, read with the section 206AA and rule 37BC. जैसे हमने पहले पढ़ा कि TDS का रेट कैसे डिसाइड होगा as per the Act or as per the rate provided in DTAA. But there is a section 206AA where the Act has defined that if a transaction has been entered into a particular person having no PAN, then there will be a liability to pay tax at a higher rate. Okay, so section 206AA states to deduct the tax at the rate specified in the relevant provision of the Act, or the rates or rates in force, or at the rate of 20%, whichever is higher. Okay, जब अपने एक्ट और DTAA की बात कर रहे हैं तो वहां पे लोअर है, जब अपने 206AA को 195 के साथ रीड कर रहे हैं तो वो हायर बता रहा है. तो करने का क्या, whether to deduct at a lower rate or at a higher rate. Okay, that's why Rule 37BC has been introduced under the Income Tax Act. Read with the rules, which says that the provision of section 206AA shall not be applicable if payments to the non-resident are in nature of interest, royalty, FTS, dividend, transfer of any capital asset. So provision of 206AA is not applicable only for this kind of income which has been defined under section 9, that is interest, royalty, FTS, dividend and transfer of capital asset. Okay, so if there is an income from the business connection or PE in India, then if that person does not have a PAN in India, you still have to deduct the tax at the higher rate or get the benefit of DTAA. Okay, but if there is a payment to non-resident for these transactions, then then section 206AA shall not be applicable. That's the first part. Second, the payee means a non-resident has to provide to the payer name, email ID, contact number, address in the country or specified territory outside India of which the payee is a resident, tax resident certificate if issued by that country, TIN or unique number issued by the government of such country or territory. Okay, all this information has to be collected from non-resident by the payer. He has to keep that information, should provide that information at the time of assessment or at the time of issue of form by a chartered accountant. Okay. Consequences of non-compliance. मैंने ये डिस्कस किया कि आपको TDS लगेगा अगर चार्जेबल टू टैक्स है, आपको ये DTAA का बेनिफिट लेना है, ये सब देखना है, लेकिन you forgot to get the benefit of DTAA, you forgot to deduct the TDS, then what is an issue? What is the consequences? Once you have made the payment to non-resident, forgot to deduct the TDS under section 195, it will result into a disallowance under section 40A1 at the rate of 100% of the expense amount. Mind it, here it is 100%. When we do a transaction with the resident and forgot to deduct the TDS or deducted but forgot to deposit the TDS, that is disallowed at the rate of 30% of the expense amount. When we talk about the non-resident, it is disallowed at the rate of 100%, means that entire expense will be disallowed. That's okay. चलो ये disallow भी कर दिया, हमें तो कोई दिक्कत नहीं है, मैटर खत्म करो. Second issue, recovery of tax under section 201 and interest under section 2011A. As you have not deducted the TDS, government को वो tax non-resident से मिला ही नहीं, so government is at the loss. So what the government will do? Government will collect that tax from yourself under section 201 and also collect interest under section 2011A. Okay. Penalty under section 271C is applicable for non-compliance of the provisions of the Act. Then there is a prosecution also under section 276B. Okay. So I suggest you that whenever the transaction is with regard to a non-resident, kindly check whether it is chargeable to tax or not, whether the person has a PAN or not, whether the DTAA benefit is available to him or not. ओके जब हम बात कर रहे हैं कि भाई टीडीएस उसको लग रहा है, टीडीएस मुझे भरना है, सो अब उसकी प्रोसेस क्या है, अब उसके ऊपर हम आते हैं. सेक्शन 195(6) रीड विद रूल 37BB. So here the government has specified that whether or not chargeable under the provision of the Act, the person responsible for paying to a non-resident any sum shall furnish the information relating to payment of such sum in such form and manner as may be prescribed. Okay, मैंने यहाँ पे इम्पोर्टेंट इसलिए दिया हुआ कि सम चार्जेबल है या नहीं है. गवर्नमेंट इंफॉर्मेशन चाहती है आपसे फॉर दैट डेटा एनालिसिस पर्पस, इसके अलावा कुछ नहीं होगा. बराबर, एट द टाइम ऑफ असेसमेंट भी अगर वो डेटा आप मांगे तो मुझे देना ही था, लेकिन नहीं, एट द टाइम ऑफ मेकिंग पेमेंट they want you to file particular form in a particular manner, and for that purpose they have defined the rule 37BB. Rule 37BB provides for furnishing of form 15CA before making a payment to non-resident, whether or not such payment is chargeable under the provision of the Act, except for the list of transactions given in the specified list under Rule 37BB and Schedule 3 of the FEMA. All other transactions other than that exception given under specified list and FEMA shall be subject to filing of Form 15CA. Keep that thing in mind. Here the chargeability of the tax is not important. We have to file the Form 15CA if it is not exempted under the specified list given in Rule 37BB. Okay, Rule 37B has given the list of transactions where Form 15CA is not required. I'll take an example for the import of the goods, for the maintenance of the family. हम अगर कुछ remittance outside India कर रहे हैं तो वो, if you are doing a transaction for the cultural activity, you are making a payment for the cultural activity, then also they have been given the exemption. Okay, gift है तो उसके लिए भी exemption है. ठीक है. Provides for furnishing of Form 15CB. अब तक हमने बात की 15CA, इनकम चार्जेबल है या नहीं है, 15CA तो फाइल करना ही है. But when income is chargeable to tax and TDS is applicable under section 195, then 15CA is applicable. Okay, 15CA chargeable हो या ना हो फाइल करना है. 15CB, if tax is deductible under the Act, then only 15CB is liable. Okay, clear? This is under the law. मैं ये बात करूंगा क्यों मैं ऐसा बोल रहा हूँ कि अंडर द लॉ, क्योंकि अगर प्रोसेस कुछ अलग ही चल रही है. Now, applicability of Form 15CA-CB can be divided into this 4 parts. The Government of India, while defining the form, has divided into 4 categories: Part A, Part B, Part C, Part D. If the payment to non-resident during the financial year is less than ₹5 lakhs, means अगर आप पेमेंट जो कर रहे हो, टोटल पेमेंट का एस्टिमेट आपका 5 लाख से कम है, तो आपको पार्ट ए फाइल करना है. इनकम चार्जेबल टू टैक्स नहीं है, बराबर, तो पार्ट ए है. पेमेंट भी 5 लाख से कम है तो पार्ट बी इज फॉर द सेक्शन 195(2), 3, 4. If the non-resident or the Indian resident has taken a certificate for the lower deduction or non-deduction under section 197 or 195, from AO, then part B has to be filled up. Okay, जब यहाँ पे लोअर डिडक्शन और नॉन डिडक्शन का क्लॉज आएगा तो ही पार्ट बी फिलअप करना है, नहीं तो नहीं. Part D, before moving to part C, I am moving to part D. If the payment is not chargeable to tax under the Act and greater than ₹5 lakh, then part D is applicable. Okay, income chargeable to tax नहीं है, 5 लाख से कम है, part A. Income chargeable to tax नहीं है, 5 लाख से ज्यादा है, part D is applicable. But when the payment is chargeable to tax and exceeding ₹5 lakhs during the financial year, not obtain certificate for lower deduction or non-deduction under section 197 or 195, then form 15CB shall be applicable. Okay, when 15CB is applicable, when income is chargeable to tax more than 5 lakhs and neither yourself or the non-resident has not taken a lower deduction or non-deduction certificate from the authority, then only 15CB will come into the picture. और अब आता है 15CB का क्वेश्चन कि 15CB कब लगेगा. तो यहाँ पे मैंने इसका पिक्चोरल रिप्रेजेंटेशन बनाया हुआ है. फर्स्ट डिसाइड करें कि वेदर पेमेंट इज मेड टू नॉन रेसिडेंट. नो, कोई फॉर्म ही नहीं. अगर वो नॉन रेसिडेंट नहीं है तो सेक्शन 195 नहीं आ रहा, 195 नहीं आ रहा तो रूल 37B भी नहीं आएगा, तो मैटर एंड्स. वेदर पेमेंट इज मेड टू नॉन रेसिडेंट, यस. Whether payment is covered under specified list or schedule 3 means rule 37BB has provided the specified list. अगर वो ट्रांजेक्शन है तो क्या आपको चेक करना कि अगर वो ट्रांजेक्शन है तो मुझे 15CA-CB का फॉर्म फाइल नहीं करना है, मैटर एंड हो गई, नो फॉर्म्स. लेकिन वो अगर स्पेसिफाइड लिस्ट में कवर्ड नहीं है, मतलब आपका ट्रांजेक्शन जो है नॉन रेजिडेंट के साथ, if it is not covered in the specified list, not covered in the schedule 3 of the FEMA, that is a current account transaction, then again check whether payment is chargeable under the provision of the Act. If yes, check further whether payment is greater than 5 lakhs. If yes, then check lower TDS, non-TDS applicable or not. If lower TDS or non-deduction is applicable, then 15CA part B is to be filed for the lower TDS and non-deduction. And if lower TDS non-deduction is not applicable, part C, 15CA part C along with 15CB to be filed. Okay, but assume that the payment is not chargeable under the provision of the Act. Then again, you have to file because that transaction is not covered in the specified list or schedule 3. So you have to file form 15CA part D. Okay, if the payment is greater than 5 lakhs, no, तो 15CA part A. अगर greater than 5 lakhs, 15CA part D. Okay, so this chart will provide you the entire summary of when 15CA part A, B, C, D is applicable. Got it? Checklist for the issue of form 15CB. अब 15CB किसको इश्यू करना है, तब चार्टर्ड अकाउंटेंट का रोल पिक्चर में आता है. Because 15CB is a certification provided by the chartered accountant with regard to compliance of the provisions of the Act. Read with the rules. Okay, so जब हम 15CB इश्यू करना चाहते हैं, then kindly make sure that following documents have been reviewed before furnishing of 15CB. Certified copy of the signed contract. आपका जो भी ट्रांजेक्शन हुआ है, पहले वो ट्रांजेक्शन का इनवॉइस आपके पास आता है. तो इनवॉइस में तो क्या होता है कि बोला जाता है कि चार्जेस फॉर दिस, चार्जेस फॉर दी रॉयल्टी, चार्जेस फॉर दिस सर्विसेज. लेकिन उसके लिए उनके बीच एक एग्रीमेंट भी बनता है व्हेन देयर इज अ ट्रांजैक्शन विद अ नॉन रेसिडेंट. सो आपको वो साइन कॉन्ट्रैक्ट भी देखना चाहिए कि उस कॉन्ट्रैक्ट में कौन सी सर्विस डिफाइन की है, उसके टैक्सेशन का क्लॉज क्या लिखा हुआ है. जब हम ग्रॉसिंग अप की बात कर रहे हैं तो वो भी देखना चाहिए कि ग्रॉसिंग अप एप्लीकेबल है या नहीं है, क्योंकि कई बार ऐसा होता है कि नॉन रेसिडेंट डिनाई कर देता है कि आई विल नॉट गेट एनी टैक्स लायबिलिटी. सो एट द टाइम ऑफ मेकिंग पेमेंट ऑफ TDS, ग्रॉसिंग अप प्रोविजन हमें एप्लीकेबल करना पड़ता है. सो काइंडली चेक साइन कॉन्ट्रैक्ट, चेक द इनवॉइस की इनवॉइस में क्या लिखा हुआ है. टेक द कॉपी ऑफ द लेजर, ताकि वो आपको पता चले कि कौन कौन से ट्रांजेक्शन हो चुके हैं. सिर्फ यही ट्रांजेक्शन है या इसके अलावा भी कोई ट्रांजेक्शन है विच आर सब्जेक्ट टू TDS और नॉट. ओके, कोरस्पॉन्डेंस ऑन विच रिलायंस इज प्लेस इंक्लूडिंग ईमेल्स. एक पॉसिबल आप अपने क्लाइंट को बोलिए कि ईमेल का जो ट्रेल होता है वो भी आपके साथ शेयर करे, ताकि आपको पता चले कि ट्रांजैक्शन किस तरह से डिफाइन हुआ है, क्या उसमें कंडीशन रखी गई है. सपोर्टिंग वाउचर इन केस ऑफ रीएम्बर्समेंट, दिस इज वेरी इंपॉर्टेंट सर. आप अगर नॉन रेसिडेंट का ट्रांजैक्शन देखोगे तो आपको पता चलेगा कि देयर आर सर्टेन ट्रांजैक्शन व्हिच आर विद रिगार्ड टू रीएम्बर्समेंट. फॉर एग्जांपल, your client is importing goods in India. For that, he has taken a service of freight company, which is located outside India. Okay? वो सर्विस आप डायरेक्ट नहीं ले रहे हो, लेकिन आपने बोला आपके नॉन रेसिडेंट पार्टनर को कि भैया वो सर्विस तुम ले लो, यू चार्ज मी इन द बिल, यू चार्ज मी इन अ सेपरेट बिल. ओके, तो इन दैट केस फ्रेट तो जो मुझे पे करना है वो रिएम्बर्समेंट हो गया. ठीक है, तो वो अगर मैं ऐसा बोल रहा हूँ कि उसके ऊपर TDS नहीं लगेगा, then you need to check this supporting reimbursement which the freight company has given to your non-resident party. Kindly ask your party to provide that supporting documents so that you can check whether is there any markup involved in it or not. If there is an element of profit, then that transaction may be covered under Section 9(1) business connection, or may be covered under royalty, or maybe FTS or any other criteria. Okay, supporting for placing reliance for existence of PE in India. उससे एक डिक्लेरेशन लीजिए कि आपका PE इंडिया में है या नहीं है. If that person is saying that I do not have a PE, kindly take a declaration that there is no PE in India. Otherwise, अगर वो उसने PE का डिक्लेरेशन नहीं दिया, if afterwards you find that there is a P and no TDS has been deducted, then it is a responsibility of the chartered accountant that they have provided a false certificate. So kindly collect all these documents, check all these documents. It will not take more than half an hour if you take all these documents. Okay. Consequences of non-compliance for 15CA-CB. पहले हमने बात की थी कि अगर नॉन रेसिडेंट के ऊपर टैक्स लगता है और वो अगर हमने नहीं काटा है, then what are the consequences? Now these are the specific consequences for non-compliance of filing of 15CA-CB. Okay, non-compliance of Section 195(6) which provides for the filing of 15CA-CB. Penalty under Section 271 of ₹1 lakh. So means your client is liable to pay a penalty of ₹1 lakh for non-filing of 15CA or CB as may be applicable. Okay, ठीक है, वो तो क्लाइंट के ऊपर लगने वाली है तो हमें क्या चिंता है, but you have to think about it. Furnishing incorrect information in certificates means whenever you issued a form 15CB to your client, then there is a false certification. The penalty on CA of ₹10,000 per form 15CB plus ethical issues with our ICAI. Okay, so this अगर आप 15CA-CB इश्यू करना चाहते हैं तो मैं नहीं बोल रहा हूँ कि आप डिटेल में नॉन रेसिडेंट के DTAA या उसके इंटरनेशनल टैक्सेशन के प्रोविजन पढ़िए, बट काइंडली गो थ्रू सेक्शन 195, काइंडली गो थ्रू द DTAA executed with that country. Kindly check 15CA-CB applicability part A, part B, part C, part D and file it. बहुत सारे ट्रांजेक्शन ऐसे आएंगे कि जहां पे 15CA-CB की एप्लीकेबिलिटी होती है. ओके, स्पेसिफाइड लिस्ट के जहां पे वो उन्होंने एग्जम्पशन दिया हुआ है वो बहुत सारे ट्रांजेक्शन भी है, लेकिन वो जनरली ऐसा ट्रांजेक्शन नहीं है कि जो बिजनेस में कवर्ड हो, लेकिन बिजनेस में बहुत सारे ट्रांजेक्शन ऐसे आएंगे वेयर इट इज एप्लीकेबल. सो काइंडली चेक दैट. अब मैंने यहाँ पे डिस्कस कर लिया कि 15CA-CB कब लगता है, नॉन रेसिडेंट किसको बोलते हैं, टैक्सेशन क्या है, सब आ गया. लेकिन फिर भी 15CA-CB में इश्यूज हैं जो अभी भी कवर अप नहीं किए हैं गवर्नमेंट ने. कौन कौन से ऐसे इश्यू है? Assume that there is a payment by one non-resident to another non-resident which is chargeable to tax. Okay, where both the non-resident making a transaction for the source of the income which is in India. So Act बोल रहा है कि as the source is in India, you are liable to pay. I am taking an example. One company who is providing a satellite link is located in Singapore, providing a service to a person in India for the particular transaction, but the payment thereof is to be made to a company located in UK. सर्विस इंडिया में प्रोवाइड हो रही है सिंगापुर वाले से यूके को. ओके, सो देयर इज अ ट्रांजैक्शन बिटवीन वन नॉन रेसिडेंट टू अनदर नॉन रेसिडेंट. 15CA-CB का जो फॉर्म है जिसमें उसमें क्राइटेरिया दिया हुआ है, उन्होंने मांगा हुआ है IFSC कोड एंड DSR कोड. ओके, सो जब नॉन रेसिडेंट की जो इंडियन बैंक से पेमेंट ही नहीं कर रहा है तो वो 15CA-CB फाइल करना चाहता है, तो वो कौन सा IFSC कोड डालेगा, कौन सा BSR कोड डालेगा? Government has not identified this transaction, so this transaction is still out of the purview of the tax. Okay. Second, when the payment is chargeable to tax but not involving an authorized dealer bank, like barter system. मैंने आपसे कुछ सर्विस ली, मैंने आपको कोई सर्विस दी, payment is not in the money. So how do that transaction will be taken care by 15CA-CB? यहाँ पे चार्जेबिलिटी और नॉन चार्जेबिलिटी तो दूर की बात है, मुझे तो इन्फॉर्मेशन देना है गवर्नमेंट को, भैया ये ट्रांजेक्शन हुआ है. हाउ आई विल फिल अप? मोस्ट फ्रीक्वेंट ट्रांजेक्शन, आप अपने क्रेडिट कार्ड से आईफोन में या किसी फोन में कोई ट्रांजेक्शन करते हो जहाँ पे आपने iTunes परचेज किया, पेमेंट करते हो आप, वो फॉरेन करेंसी में होता है. That means the payment is made outside India to a particular non-resident who you do not know about it. Okay, लेकिन ये ट्रांजेक्शन हुआ, by law you are supposed to report it, whether taxable or non-taxable, you are required to report it. How will you report it? क्योंकि उसमें कोई BSR कोड तो है ही नहीं, क्योंकि वो तो बैंक है ही नहीं. It's a credit card division separately from the bank. So how will you enter the BSR code? पॉसिबल है कि आपको एक फेक BSR कोड डाल के, डमी BSR कोड डाल के कंप्लायंस करना पड़ेगा. So these are the issues in 15CA-CBs which I am trying to explain with you. So with this, I have completed my part of explaining the TDS provision with regard to the non-resident. If you have any question with regard to any of this section, kindly discuss. I am going through the chat box. What if no, that is okay. The commission is payable to agent outside India by the resident. Is that taxable or not? Sir, in this case, you have to first define what type of commission you are paying. Whether you are paying commission for the activity or the source which is situated outside India means it is an export commission. तो मतलब कि आपने एक एजेंट रखा है वहां पे, वो उसको बोला कि आप मुझे उसी कंट्री में या कहीं और कंट्री में सेल करवा के लाओ तो मैं आपको कमीशन दूंगा. So that is an export commission. So in that case, the source of the income is not in India. Receipt is also outside India. That transaction is not covered under royalty or FTS because it's not a technical service. So in that case, that will not be subject to tax in India. You have to file form 15CA for that. Yes, 15CA is applicable because वो exemption में नहीं है. So you will have to file either form 15CA part A or part D, or have to obtain lower deduction certificate. Okay. What if applicable form for claiming DDAA has been filed? Form 67 has been filed. Do we need to file form 10F? Yes, sir. Form 10F is compulsory applicable. If the person with whom you have made the transaction is having a PAN, then kindly file form 10F electronically. Ask non-resident to do a login, file form 10F and forget about it. I am still not clear what if applicable form for claiming DDAA has been filed. If you have filed that form, there is no form to be filed for the purpose of getting DDAA benefit.
Exactly.
Only 15CA-CB is there where you have to define whether the benefit of DDAA has been taken by the SSE or not. For that, you have to collect the document which we have discussed so that once you get the benefit of DTAA, you have to make sure that you have the documents based on which you have certified that yes, DTAA benefit is available to an SAC. Anything else? Any other questions?
Dipal sir, I have a question for
Yes,
you.
sir.
Though it's a generic question, but today's digital era, we use
Mhm.
so many applications and everything. Those are not having any P in India,
Yes.
and we are using so many technology platforms. We pay through this PayPal and
Yes.
credit cards and everything. Right?
Yeah.
So I just want to know for general public, what are such kind of common transaction? One, you give an example of App Store, but
Mhm.
for a business, from a
Mhm.
business perspective, what are such transactions which are highly that can be in radar of income tax department, where
Mhm.
these things will be applicable for sure and people are not reporting it. See, we have the data of so many things now, so in future they may get some notices regarding that. So if you can elaborate on that part.
Sir, I have taken one example.
Yes.
Even check your own credit card transaction. There may be some transaction with regard to a non-resident payment. So when we talk about the business transaction, most of the people do a transaction through their credit card or company credit card with regard to non-resident payment. So they do not covered under the 15CA-CB criteria. So it goes out of the purview. So it is a duty casted on the chartered accountant who check the books of accounts that whether is there any transaction with regard to a non-resident which is not covered. So एक ऐसा एक एग्जाम्पल है. दूसरे एग्जाम्पल ऐसे होते हैं कि जहां पे नॉन रेसिडेंट को मैंने बताया कि बार्टर सिस्टम में आपकी बुक्स में वो लिखा गया कि भाई उसकी एक वैल्यू डिफाइन की गई कि मैंने वो सर्विस ली है, सामने मैंने उसको एक सर्विस प्रोवाइड कर दी है, बराबर. तो वो ट्रांजैक्शन आपकी बुक्स में एज ए एक्सपेंस रिकॉर्ड हुआ, सामने उसको पेमेंट की सामने आपने एक इनकम भी रिकॉर्ड कर ली कि मैंने ये उसको सर्विस प्रोवाइड की है और तो ट्रांजैक्शन स्क्वायर्ड ऑफ हो गया, तो वो भी परव्यू में नहीं आ रहा है. ये नॉर्मल ट्रांजैक्शन है बिजनेस में जो होते हैं. With regard to the certain transaction which you are talking about, the PayPal or other transaction, I must tell you first, जो भी हम अपने ऑनलाइन सब्सक्रिप्शन भी पे कर रहे हैं तो वो भी एक तरह से ट्रांजैक्शन विद रिगार्ड टू नॉन रेसिडेंट है. सो तो गवर्नमेंट ने तो डिफाइन कर दिया कि अगर वो ट्रांजैक्शन रॉयल्टी या एफटीएस में है then liable to pay tax whether the service is used in India, whether having P or India, doesn't matter. लेकिन आपने अगर DTAA चेक करेंगे तो हमें ये डिफाइन करना है कि क्या वो सबसे पहले रॉयल्टी या एफटीएस में फॉल होता है या नहीं होता है. अगर वो रॉयल्टी और एफटीएस में फॉल होता है एज पर DTAA, then only liability to pay tax in India arise. Otherwise, you can get the benefit under DTAA, not defined, not liable to pay tax, no need to pay any tax in India. Okay.
Sir, we are taking a last thing in the chat box. Is 10F required to be filed for AY 22-23 even if ITR filed and refund received, right?
हाँ सर, ये फॉर्म 10F विथ रिगार्ड टू नॉन रेसिडेंट ट्रांजैक्शन है. आईटीआर के रिलेशन में तो इसकी बात ही नहीं हो रही है. टीडीएस भी काट लिया, सब कर लिया, मैं मान रहा हूँ नॉन रेसिडेंट के साथ, लेकिन ये एक प्रोसीजरल फॉर्मेलिटी है ताकि डिपार्टमेंट को पता चले कि देयर इज अ ट्रांजैक्शन विद दिस नॉन रेसिडेंट who has having a PAN, who has deducted it, there is a TDS, whether he is claiming it or not. That's why this provision has been introduced. सर 67 फाइल कर दिया वो सही है, लेकिन फॉर्म 10F लॉ ने प्रिस्क्राइब किया हुआ है इलेक्ट्रॉनिकली फाइल करने के लिए. अगर नॉन रेसिडेंट का पान नहीं है, फायर आप कलेक्ट करके रखो फॉर्म 10F एट द टाइम ऑफ असेसमेंट. अगर अथॉरिटी मांग रही है, डिस्प्ले देम. Otherwise, Form 10F, person having a PAN, file it. ये प्रोविजन बहुत लेट में सबको ध्यान में आया है, तो most of the people has not filed it. Nothing to worry. There is a time you can file it.
Thank you, Dipal sir, for such a wonderful session on 15CA-CB. As we discussed in the starting, that this is a subject in itself. And though it is considered that it's job of a CA for filing 15CB, but rather more of the transactions fall under 15CA. So in my opinion, all the tax practitioners, whether CA or not, should be aware about this provision, should have that patience to read DTAA, understand the non-resident transaction. So thank you for that, sir. And from all three associations, we wish to offer this certificate of appreciation to you for your valuable time and insights.
Thank you.
Please accept it, sir.
Thank you. Thank you very much, sir.
And now I request Ramesh Trivedi sir to propose a vote of thanks for today's session.
President of Income Tax Bar Association Ahmedabad, Dhruvin Shah, President of Bhavnagar Income Tax Bar Association Prembhai Goplani, President of Bhavnagar State Tax Bar Association Deepakbhai Jani, all respected panelists and participants. TDS on payment of NRI for various types of payment is a very complicated subject, and applicability of Form CA and CB is also complicated. Even all the TDS provisions are complicated, but these provisions are very complicated. But our eminent speaker, Chartered Accountant Dipal Shah, has explained this subject very deeply and a very easy language. So I personally and on behalf of our three organizations, I heartily thank you, eminent speaker Dipal Shah. I also heartily thank you all participants who are giving for valuable time and join this webinar. Again, I thank you, all of you. Thank you.
Sir, sir, there is a request for PPT. So if you can share with us, we will circulate with members of all the associations.
Sure, sir. I will provide it to Dhruvin bhai.
Yeah.
Thank you, sir.
Thank you, sir.
Okay, sir.
Thank you.